Let's start off with the fact that we're seeing nice gains coming through in the FTSE. Dow Jones futures pointing to a positive start. In South Africa, we're also much higher despite the mixed data coming through in Asia this morning, and of course the mixed equity performance in Asia today. What is driving sentiment? Would you say it's some of the optimistic phrases that we saw out of the beige book yesterday?
Absolutely, I would definitely say that, and we see also that US futures are trading quite a bit higher today, and just based on what happened yesterday, I think we started off badly, and as soon as word came out of the United States regarding the beige book, we've seen that translated into our markets. As you mentioned earlier, Asia was very mixed this morning, but yes, very nice gains made in our markets because of that the beige book. I think the salient themes there was that manufacturing was stronger, and which is supported by the exports, and that consumer spending was steady, which is so important for the United States GDP. However, housing is still subdued and weak, very high inventories there, and also companies are still not employing and increasing their capital expenditures. So yes, a slight improvement there in the beige book, which is a nice surprise. But yes, it still does point out that quantitative easing will be reinstilled, and we expect that the Fed will act there to boost the United States economy by buying inflation protected securities with the maturing mortgage-backed securities that are happening there. But this all will be crimped by initial jobless claims that are coming out later. Yes, it is a more frequent number than the non-farm payroll data, which comes out monthly, but it is important, and it will somehow sour sentiment should it not come out as expected a little bit later today.
Well, let's touch on the third quarter earnings in the US. We have had basically a mixed bag, but it's also interesting to note that on the banking front, a lot of investors are still concerned about the bank's balance sheet. We know what's happening with the Bank of America, the fact that we are starting to see a lot of people coming to the fore saying that they're not happy with the way that the mortgage securities have been packaged, and of course the Fed, the likes of PIMCO and BlackRock suing the Bank of America. And then you also had Jim Rogers and George Soros saying that they don't think the banking stocks in the US are attractive as yet because of the uncertainty with regards to the balance sheet. But that said, third quarter earnings generally have been looking far better.
Much better. Yesterday we had Wells Fargo and Morgan Stanley, I believe, come out. Morgan Stanley showed a surprising loss, whereas Wells Fargo did pretty well. So, really mixed bag there. But generally, with the results that have been coming out of the United States, about 84% of them have been better than expected across all industries. So I think, we would find mixed bags. I think attention may slightly move away from what the banking sector is doing towards more consumer-orientated stocks, to see whether are consumers spending, what is the sentiment behind those stocks, and what the directors say about the expectations looking forward as far as their industries are concerned.
Looking at the Asian markets, as we mentioned, relatively mixed. We had Chinese GDP out 9.6% for the third quarter from 10.3% in the second quarter. Inflation also to the upside, 3.6%. We know that their target is basically at 3%, so it is 0.6% higher than the Chinese government would like to see. Just looking at the differences between all the economies at this point in time in Ntombenhle, you've got austerity in Europe, you've got loosening monetary policy in the likes of the US, and then you've got tightening monetary policy in the likes of China. How does that all translate in terms of what we could see in South Africa?
The translation is quite mixed. I mean, look, what came out of China today was that, there is a slowing in the GDP number, but it's still a relatively high number, and I think industrial production there was what helped that number quite a bit, and that's more in local and Asian markets than elsewhere in the economy or in the world, such as developed markets. And but retail sales was also up in China, and that all translates to the demand and growth in China, and that demand and growth will influence our economy. But when you look at what all the different central governments, central banks and governments are doing, it is a mixed bag. I mean, China has been for a while watching the real estate sector and putting some tightening measures in there also. And last week they increased reserve requirements for banks, and also there was an interest rate hike in China this week. UK coming out saying that they're going to cut jobs, and they're going to impose some taxes. United States saying they're going to be looking more more further into quantitative easing. And so it's just so mixed, and you know, you really have to take an economy in and of itself and look at what is required in that economy. And I think China being, you know, going against it and saying they want to try and protect themselves, whereas the United States is looking for any opportunities they can in order to boost their economies. So it's still a very long way to go for any kind of sustained recovery in any of these economies.
And so, Ntombenhle, let's touch on Clicks, reporting a 27% gain in annual diluted headline earnings per share to 207.7 cents. Clearly a company that has bucked the trend in comparison to the other retailers that we've seen. Just looking at the stock, would you say that it's looking slightly fair value at this point in time? We have for some time now been talking about how retailers are looking a bit expensive. Would you be heading into Clicks at these levels?
Sure, I think it's a slight bit late to try and get further gains. I mean, it has run about, I think, about 65% year to date, and that's quite a you know, leaps and bounds there for Clicks. But they had such good results today and really fended off the state of the economy at the moment, where consumers have tight belts and tight budgets. And you know, retail turnover went up 15% at Clicks, and revenue was up 9% of Clicks. They've managed to increase their pharmacy distribution, add new stores, and are looking to expand floor space by 5%. And I think there's just such a lot of growth potential there, but it has run quite a bit. So whether I'm keen to climb in there yet, I'm not sure. But I think maybe if there was a slight pullback in the share price, then perhaps it would present an opportunity.